Hello everyone, this is Abhijit Chatterjee recording our weekly session for Chartsarefun. This is for the week of February 3rd, recording this on February 9th. Well, two back-to-back weeks. Market seems to have been repeating a pattern with a panic Monday. Market tanks, gaps down on Mondays, tries to recover through the week, and then Friday it takes another hit. So we got two back-to-back weeks. The previous, like 2 weeks ago, we had the big jitters of the DeepSeek model coming out, raising concerns on the whole big AI spending, the billions of spending that the big, all of the cloud hyperscalers have been doing, and shook the market across the board, especially the semiconductors, AI stocks got hit. Then last week was about the tariffs. There was over the weekend concerns of both Mexico and Canada being hit with 25% tariffs and China with 10%. Since then, tariffs have been, at least for Mexico and Canada, been pushed out for another month till better negotiations take place. But for the time being, tariff market did recover from the tariff fears. But on Friday, last Friday, there was the University of Michigan sentiment. Consumers are worried about the inflationary concerns, and we'll find out. There's inflation coming out this Wednesday. We'll see what happens. Anil Kashkari from the Fed was there. Job market data, the January jobs also did come out. The revisions for the December jobs was increased from 255 to 300,000. So that was a pretty hot number. But then the month of January did come down, get cut in half, closer towards the 145 plus thousand jobs. So yeah, market is worried about reasonably strong labor economy, and unemployment rate came down to 4% as well. So we'll see. Today we will be looking at a little bit of what Tom Lee shared. He did raise the fact that market has been extremely resilient in face of all the uncertainty that's out there. So he considered that as a positive. Market did close for the up for the month of January. S&P closed up a little less than 3% for the month of January, and he sees this as a positive year ahead. He is not that worried of a complete, breakdown of the market that many technicians like Tom Bowley and others are looking at. So with that, we'll share a little bit of what Tom Lee was saying, and then look at today's analysis will focus on a blog that I just posted over the weekend on semiconductors. We look at the VanEck Semiconductor ETF SMH, and then we will look at the top 6 holdings in the VanEck Semiconductor. Before I do that, I will actually show a little bit of the repeated pattern in S&P for two back-to-back weeks where it panics, sells off with a gap down on Mondays, recovers, and then sells off again on Friday. So with that, let's share the charts. So we appreciate you subscribing to our blog. This is at substack.com, chartsarefun.substack.com. We publish daily blogs. If you subscribe with your email, it's free. We will get you those blogs. Actually, Substack will get you those blogs as soon as they get published. Our YouTube site is Chartsarefun, the same channel name as the blog. It's an exciting topic. We feel charts are fun. There's tremendous amount of insights in charts. We just absolutely love to share those charts and those patterns. And last week we talked about Magnificent Seven. We had kind of thought about an upside breakout. We didn't quite get it. We got 2 big earnings. The previous week you got 4 earnings, and then last week we got Google and Amazon's earnings in pretty much across the board except Meta, which has now become really a Magnificent One. Every other Magnificent Seven stock really has got a bit of a hit. Some did respond a little upside after the release and then started pulling back. Those two in particular were Apple and Tesla. They responded positive after the open, after the earnings, and then sold off after that and pulled back quite a bit from those earnings, except Meta, which has been climbing for now 15 solid days of upside, climbing higher highs. And, that seems to be the strongest of the ones. And, supposedly their monetization of AI has been extremely strong, and that's what's caused their stock to do so well. But we know that the core news for Meta that can impact is what ends up happening with the Chinese behemoth in terms of TikTok. We know that there's been speculation of someone in the US perhaps bidding for TikTok. Elon Musk has said he's not interested. So then it leaves it with Larry Ellison. Of course, Meta is a staunch competitor of TikTok, wouldn't have any interest in buying TikTok. So it really comes down to maybe Larry Ellison putting a bid for it. But right now, TikTok news is kind of what could impact if they can't make it. The they don't make a deal, then it'll definitely help Meta and Google. But if not, those could TikTok surviving in US does have a bit of negative impacts for those two stocks. That said, we had talked about the inverse head and shoulder in MAGS. I'm not going to talk about it today, but that is resolving to a pennant shape. Pennant is now pretty much the pattern we're seeing across many of the stocks. So we will look at that. Did want to touch about Tom Lee. Tom Lee was at CNBC on Friday, and he did say that he's been extremely impressed with the resilience of the market. There was last week tariffs kind of market shook aside the tariff concerns and nicely rebounded from it. He did talk about this repeated pattern of a panic Monday followed by the upside resilience of the market coming back higher, and then a little bit of sell-off on Fridays. And this is the pattern we're talking about. Let's look at the S&P 500 chart. Let's look at the last 10 days of trading. This is where he means by the panic Mondays. This is from 61.28 panic selling off to 58.62. That's a big gap down. 2 weeks ago, that's the one that we got from DeepSeek. 3 days of recovery, and then on that Friday, sells off again. Not quite going to the lows of the Monday, but sells off and in the week on Friday. Then again, another panic gap down on this previous Monday that we got, which was on February 3rd. This was on tariff concerns over the weekend, 3 days of upside, and then Friday we get an bearish engulfing candle kind of pull back. Same thing, bearish engulfing candle kind of pull back, and market tends to recover. So overall, market in many ways, bulls would call this a cup and handle resolution possible. So from 6,099.97, about 6,100 pull back to 57.73. Back to the 61.28, a higher high from here. So this is a cup, a handle pullback. If the market can break over 61.28, you can expect a move above 6,500. That's the kind of upside. However, bears would say, hey, look at the PPO or the MACD here. The MACD is getting ready for a bearish cross of the black signal line below the red moving average line. The histogram is just about getting ready to dip below the center line of the zero line. So the bears would point this as a part about this not being a handle, but this being the start of a double top, 6100, 6128, and then a breakdown. So that M-shaped double top, if it does pan out, from a 57.73 to a 61.28, you're talking about roughly 350 5 points. So 355 points subtracted from 57.73, you're talking about closer towards the 46.73, and then another 50 up from there. So you're talking about closer towards low 4600s or 5600s is where, which is really takes it down towards the 200-day moving average near 56.55. That's where potentially, if this is an M-shaped double top, as the bears would like to call it, that's what could happen. So it's either a pull down towards the 5600 or a cup and handle breakout towards the 6500 is what the market could do. Now we know that RSI has been holding steady at the 50, which is a bullish sign. That means with all the negative news that's been out there, the market had to break down. There was opportunities for it to break down and decline back towards the 30 or lower level. So that's been holding. And we also see that MACD is holding above the center line, the histogram, something to be optimistic about. That said, the 50 days climbing, it is definitely above the 200-day in this particular case, and they're both climbing, which means the market's overall trend is bullish from lower left to upper right, climbing higher highs, and hence potentially breakout above 6,500 cannot be ruled out. SMH, which is the VanEck Semiconductor ETF, the largest holding is NVDA. 18.25% of its weight is NVIDIA. Second largest is Taiwan Semi. We know that Taiwan Semi is what manufactures all the chips that NVIDIA sells out there. They're the biggest fab out in the world out of Taiwan. Then Broadcom. Broadcom is also very big in the custom chip business. So whether the orders you're getting from either Google, all these hyperclouds, Amazon making their own chips are being sent over to Broadcom for manufacturing. So they are beneficiaries of these custom chip designs, which is a big trend. In addition to the NVIDIA AI chips, there's a lot of custom AI chips that, like Amazon has its Trainium, Google has their TPUs. Those are AI-driven chips that are being manufactured by Broadcom. Broadcom was very bullish in the December earnings, talked about massive upside in the next 2 years, solid order flows they see. Fourth largest, so that's at 9.83 is Broadcom. The fourth largest is ASML at 5%. The rest are all in the 4 to 5%. ASML is at 5.11, AMAT is at 4.75, and right there is Qualcomm at 4.71. So we look at the top 6 stocks. Let's just see what their trends are. First, starting with the semiconductor ETF, VanEck Semiconductor SMH. This is what we call as a pennant shape. Pennant in the sense that if you take the declining tops and the rising bottoms, that kind of forms kind of a triangle kind of pattern. And usually this could break either way. It could either break higher or break lower. Bears would definitely look for a break lower. And a break lower here from a 232 to a 269, you're talking about the difference of this is about 37 points. Subtract 37 from 232. That could be a big ouch, taking it all the way down towards the 195 level. So that's very bearish if that happens. However, a breakout would definitely take it to test the previous highs from July at 281.8 to near 282. So we'll find out. Usually when the triangle kind of squeezes and comes towards the apex, a resolution happens. Don't know yet what could be the catalyst. Perhaps the CPI data. If the CPI data is tame, Neil Kashkari, when he was interviewed, is expecting inflation to keep coming down this year. He does believe there could be end of the year lower rates, federal fund rate, than what we are right now, which is at 4.25. We know that Fed cut rates 3 consecutive times in September, then in November and December. And then since then, in the January meeting, they went on a pause. They expect to be on pause for quite some time. There's even expectation in the market for a hike coming, at 25% probability of a hike. Neil Kashkari, in fact, was quite confident that inflation would be on a downward trend, in particular rents, in particular housing, he expects slowing down. And hence he says that those are kind of lagging indicators. There's been slowdowns. By the time it comes to inflation data, it takes some time, but he expect the trends of that to bring inflation down this year, which means his perspective is expect to see a reasonably good CPI data this week. So we'll see if that could be the stimulus for the breakout higher. We'll find out, but this is definitely a pennant. And this topic today on the semiconductors is we see pennants everywhere. So that was the pennant that we saw in SMH, the core ETF. Not so much of a pennant in the NVIDIA, but NVIDIA is now a bit of a range-bound move. It broke down from a double top, 152.88 in November, 153.13, a slightly higher high in a kind of early January. So that's a double top. The bears would call this a M-shaped double top. So from here at the 100, going up to 153, to the middle of the M at 126, up to 153. That breakdown didn't quite come back to 100 yet, but came to 113, which is previous level of support right here. So it's right now in the range of two key support levels at the 113 to 115 and the 128 to 130. That's where it's trading. It's been trading there for the last couple of weeks. We'll see if it can break out higher and then go to test this declining top line near the 141, 142, or potentially climb even higher towards the retest of the kind of the January highs at 149 and 153. But that would have potentially point to a bullish upside in NVIDIA. The earnings is coming up in 2 weeks from now or 3 weeks from now. Last week of February, the NVIDIA announces earnings. So we're talking about on the 26th, on a Wednesday, NVIDIA's earnings comes out after market close. So we got next week and the following week, 2 weeks, and then the week after is when NVIDIA comes in. So we'll see what NVIDIA does, but this resolution out of this range from 113 to 130, we'll see if it just stays range bound next week or perhaps breaks higher is what we got to see. Now, by the way, the way you measure the M shaped double top breakdown is 153 to 127 is roughly, you're talking about what, so 27 to 153 is roughly 25 points. So subtract that from the 25 from the 127, takes it towards the 102, 101. So that's where we think this breakdown could be on NVIDIA. If it breaks 113, the next level is down towards the September low near 101. TSM, this is a wedge as well. In fact, more of a wedge. This is also a bit of a pennant, but the declining, in this case, the core support line that it tested was near 188. We saw that 188 right here, 187.66, rebounded off it. It did break below a key rising trend line from the lows. From the August lows, if you join the trend line through the lows, higher lows, right? It broke that temporarily on the news of the jitters that we got with the DeepSeek on that Monday, right? And then it immediately reversed higher. It's been since then trading in that triangle, in that kind of a pennant shape, and a breakdown or breakout higher was what we would look at in TSM. TSM has been extremely bullish in their January earnings. They are quite optimistic about chip, orders coming in from NVIDIA and their other customers. And we know that the hyperscaler CapEx spending projections have been huge. We're talking about Amazon talked about over 100 billion of CapEx spending. Why are these guys doing CapEx spending? They've all said demand for AI has been incredibly strong. They just don't have enough GPUs in their clouds to meet the needs of that AI. So they are positive. In fact, the pullback in Amazon is a buying opportunity. The pullback in Google is a buying opportunity. So was it in Microsoft? Because all these hyperscalers are very confident they'll have a strong second half once they bring on added capacity from NVIDIA. They bring on the GPUs and their own custom AI chips. They feel that they will be able to meet the demand. So as a result, this could be TSM could be a beneficiary of these chips being manufactured. So an upside breakout is what I would be looking at, but bears would definitely look for this breakdown. And a breakdown below 188 would actually be very bad because 188 to 226, you're talking about a $38 kind of a difference. 38 from 188 would effectively take it to 150 bucks, which is right down near the 151 level here from the July lows. That would be a concern, but right now, let's look at this as a positive resolution, most likely from this pennant that we are seeing. Broadcom has also a pennant shape. It broke out, gapped higher in December. That's when they had a very bullish forecast, not just for next year, for the next 2 years till end of 2027. So a beautiful breakout from the 185, 186 level was its resistance that it broke out, gapped higher, now becomes key support. It didn't quite pull back there on the DeepSeek scare. It came to a higher low at 196. Now, since then, it's in that pennant shape pattern as well. Expect a resolution next week. I would think a resolution. Bulls would look for the upside, bears would look for the downside. If it does have a downward resolution, expect the 185 level to be decent level of support. So for those looking to opportunistically buy Broadcom, maybe a 185 would be a decent entry to then from there hold and then start moving back higher, knowing that the fundamentals are extremely strong. ASML is the next weighted VanEck Semiconductor, also beautiful pennant shape. You can see that the declining tops and the rising bottoms at the apex, something should happen next week. AMAT, Applied Material, also a very big chip manufacturing industry stock. Beautiful pennant here, declining tops, rising bottoms. We will find out what ends up happening next week. And finally, Qualcomm. Qualcomm has an interesting pennant shape where we can see that the rising bottoms are along a beautiful trend line, the declining top. So we can see that the Qualcomm broke down after earnings last week from 177 to 165. Since then, has been kind of tightening in this apex of this triangle of this pennant. So a breakout or a breakdown is what we can expect. Breakdown, of course, would take it towards the 150 to 154 or rather 149, 150 as the key support, or a breakout higher would potentially lead this much higher over the 177, closer towards the 181. If it breaks 180, expect it to go back towards the 190 what used to be support will now end up being resistance around 191, 192 is where we can expect Qualcomm to break out if it does. With that, as I said, next week, key in summary, we are expecting CPI data. Neil Kashkari, the Fed from Minneapolis, is extremely bullish on inflation coming down. So he is quite confident that Fed funds rate by end of the year is going to be lower than where it is today. He does see a data-dependent Fed for the time being, but fiscal policies are also something that they're watching in terms of tariffs, in terms of the tax cuts to be continued. There is right now discussions of almost $4.7 trillion of tax cuts in play here for the economy. There is, of course, deficit spending concerns, and we know that Scott Bessent, the Treasury Secretary, is extremely honed in on the 10-year yield. That's what the market will look at. We know that 10-year yield from 3.6 had shot up to 4.8. That was still up to December. Since then, it's pulled back, is hovering around 4.5 right now from 4.8. We shall see if it can exceed 5%. That would be terribly bearish for the market. Bears would expect the 10-year yield to break above 5. That's many of them talking about it. That would mean a market breakdown, and we could not just get 5,600, we could even get closer towards the 5,000 if there's a steady increase of 10-year yield. Versus the other way around, there's a lot of supply coming in the Treasury auction market next week. We'll see how market responds to those. But if the 10-year yield does break 4.5 convincingly and goes towards 4.2, expect upside resolution in the market. That cup and handle on the S&P that we talked about, which could mean a breakout above the 6130, could take us towards the 65. So right now, I think it's that. We'll find out what 10-year yield does next week. And overall, with market looking for breaks to either play an upside on the bullish, or if, concerns on tariffs are back in the picture, and the rate, the 10-year yield rate cuts, rates start hiking up, we can expect the market to tank badly. With that, good luck investing. We are on the bullish side. We are still expecting that perhaps these pennants that we talked about in the semiconductors will resolve on the upside, and this cup and handle in the S&P will resolve on the upside. Good luck. Thank you.